Hello and welcome to the look ahead for Friday, the 23rd of May with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow we've got, overnight we've got Japanese inflation data. Then tomorrow in the European session, German GDP figures, UK retail sales. Then in the US session, we've got Canadian retail sales and then US home sales, as well as several Fed speakers. So just kicking off really with UK retail sales, just pulling up the pound US dollar here. UK retail sales are expected to remain relatively resilient, actually at 0.2%. That's month on month. That's down slightly from 0.4% previously in March, but still, holding up in positive territory, if you like, which probably comes despite the fact that we've had hotter inflation across the month of April, and also probably helped by the fact that wage growth and the UK jobs market has pretty much held up. So that is supporting retail sales. Now, this is the sterling US dollar tab that we're just having a look at here. As we can see, obviously, we've had this rally in the sterling against the US dollar. This recently has been part of a weaker US dollar story as well, where we saw sterling rise to 134.70, a three-year high, on concerns surrounding the US deficit, debt pile that's mounting. Obviously, we've had the Trump's big, beautiful bill voted through the Senate today. So there are still, and that's expected to add to the US debt pile, those sweeping tax cuts unfunded, which can create concerns, particularly given that this week we also had Moody's cut the credit rating for the US, citing concerns over debt. Now, we don't have any major US data. Obviously, there is home sales, not likely to cause a massive impact as far as the US is concerned. There are also some Fed speakers that are due to hit the airwaves. Attention there again is going to be on concerns, surrounding perhaps the outlook for fiscally the US and also Fed rate cuts. We know as far as the Fed is concerned, they are intending to be patient as far as rate cuts are concerned. So we're just seeing, a hit at the moment at that level, that sort of that 134.50 level. That was the high that we saw back in April. So it'll be interesting to see what happens here. Is this going to hit and rebound and have a fall back towards that sort of 132.50 level? If we get weaker than expected UK retail sales, then we could see some weakening in this pair, but for now it does remain very much within that rising channel. So a break above that could see buyers look towards the 135 level and then up even to 137.50. This was a level seen back in 2022. So that's what to be watching there. Just going to pull up the DAX now. DAX is trading around its record highs. Obviously, we've got GDP data due tomorrow. GDP is expected to contract 0.2%. It's not the preliminary reading, so it's not expected to be massively market moving. But DAX has been supported by expectations that the ECB will continue cutting interest rates. They're expected to cut rates by 25 basis points in the June meeting and potentially cut rates again later in the year. The DAX has also benefited from that sort of sell America trade. We've seen a rotation into Germany, which is expected to be more politically stable now that it's sorted out its coalition leader. And obviously, we've got that massive defense spend that was also announced earlier in the year. So plenty of supporting factors as far as that's concerned. Obviously, a larger than expected contraction could unnerve investors and pull away from this record high of the 24,000. That's where we're looking to break above. Upbeat sentiment could be taking the next level. 24,500 would be the next logical level on the upside. May see some profit taking at the end of the week, given that it's Friday. And just finally looking at US dollar and Japanese yen. So we've seen a really big pullback here in the US dollar Japanese yen. As I said, we've got Japanese inflation data due overnight, expected to show core inflation rose to 3.4%, up from 3.2%, which would support the case that the Bank of Japan would be looking to hike interest rates sooner rather than later. Bank of Japan left rates unchanged in the latest meeting. However, they have pointed to, if the data shows need for hikes, that they are ready to do so. There's a little bit of caution, obviously, relating to the trade tariffs. Japan and the US are currently in talks. There is some hopes that a deal may be reached soon. Obviously, we've also got what's going on with bonds. There could be some potential of the unwinding of the carry trade here as well. We also saw US Treasury yields have spiked quite significantly this week on the back of those concerns over the US debt. We also had a weak bond auction both in the US and in Japan with 20-year bonds and treasuries, which is also sort of just catching the attention of traders. So this is we had that rebound, we had a recovery up to that 148.60 level, which was the low we saw in December. Failure, we saw rejection at that level, and it has since broken down the 146 level and the 145 round number. We're now sitting at the 143.50 level, which we're just testing at the moment. Also here we've got the upper band of that falling channel, which was the actual low of today, the support. So there are the two levels that we'll be watching for: a break below 143.50 and then also take out of today's low, which is 142.80, which means a re-enter into that falling channel. RSI is just below 50, so it does potentially favor the bears here. Just need to see how it's going to behave around these levels. So thank you very much for watching. I hope that you found it useful, and please do give this video a like, and we'll see you tomorrow.